Good evening, everyone. Welcome to the channel. Today I am going to talk about China Suntien interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Unfortunately, the provided summary does not contain any information. However, I can provide a general template for an overview essay on the topic, list of businesses and services provided by a company. Here is a sample essay. The company offers a diverse range of businesses and services to cater to various needs of its customers. Some of the key services include insert list of services. These services are designed to provide convenience, efficiency, and value to customers. Some of the notable businesses provided by the company include insert list of businesses. Each business is carefully crafted to meet specific customer requirements and preferences. The company's commitment to excellence and customer satisfaction is evident in its wide range of offerings. By providing a comprehensive suite of services and businesses, the company aims to establish itself as a trusted partner for customers. Note, since there is no provided summary, I had to create a general template. If you provide the actual summary, I can generate a more specific essay based on the information. The significant increase of 51.51% in China Suntien Green Energy, 956 HK, stock price over the past year, can be attributed to a combination of factors related to the broader green energy sector, supportive government policies, and company-specific activities. A positive outlook on the green energy sector, driven by recommendations from Guosheng Securities to invest in undervalued green energy companies, has contributed to the increase. China's supportive government policies, including renewable energy subsidies and financial backing for green initiatives, are also expected to benefit companies like Suntien. China Suntien's increased power generation capacity, rising by 10.55% year-on-year, is another factor that has driven up its stock price. Additionally, the company's plan to issue new H-shares at a premium of around 16.55% suggests strong investor demand and potential for capital infusion for future projects. Growing investor confidence in the company is evident from increased shareholding by institutional investors such as Great Wall Life Insurance Co., Limited, and Hebei Construction Investment Group Co., Limited. Overall, the positive market environment, coupled with government support and increased operational output, has driven the significant appreciation in China Suntien's stock price over the past year. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, key contributors include wind farm construction, electricity sales, natural gas business expansion, completion of new pipeline projects, increased utilization of existing pipelines, acquisition of new customers, and development of energy storage business. These initiatives have led to an increase in revenue. On the decline side, factors such as decrease in natural gas sales volume, weakening demand in the natural gas market, volatility in international energy prices, fluctuations in interest rates, exchange rate fluctuations, and a 9.6% decrease in mainland China revenue have contributed to revenue decline. These challenges highlight the need for companies to adapt to changing market conditions and diversify their revenue streams to maintain growth. Net income and profit margins. Overview. The net income of the company experienced significant fluctuations over the period, with both increases and decreases recorded. The net income increased by Yen50,354,405.26, 312,641,325.78 yuan, and 205% from RMB 3,968,607.11 to RMB 12,129,407.89. However, it also decreased due to pipeline transportation price decrease by $40,512,103.11, and by minus 38.6% from RMB 1,887,800,702.94 to RMB 1,146,605,891.46. Profit margins were affected by various factors, including the enhanced linkage mechanism between upstream and downstream natural gas prices, which improved profit margins. However, operating profit margin decreased from 2.04% to 2.03%, while gross profit margin and net profit margin remained relatively stable. The gain on disposal of non-current assets also showed a slight improvement from 2.5% to 2.6%, Overall, the company's net income and profit margins were influenced by changes in market conditions, pricing mechanisms, and operational efficiency. The company is indeed generating positive operating cash flow. This is evident from multiple sources within the financial summary, including a significant increase in net cash flows from operating activities of 47.03% to $3,081,905,571.98. Furthermore, both years 2024 and 2025 show positive operating cash flow with respective amounts of $2,096,087,747.38 and $3,081,905,571.98. This consistent trend confirms the company's ability to generate sufficient cash from its operations. The company's debt level and interest expenses have exhibited mixed trends over time. While total debt increased from RMB 7.5 billion to RMB 8.3 billion on page 223, it actually decreased by $1.4 billion on page 308. Long-term borrowings also saw an increase from RMB 33.5 billion to RMB 34.7 billion on page 234. However, interest expenses have generally trended downwards, with decreases of 13.1% and 10.7% reported on pages 105 and 253, respectively. The only exception is a significant increase in interest expenses on page 309, where it rose by 3.44%. Overall, the company's debt level has shown some fluctuations, but interest expenses have largely decreased, except for this one notable instance of an increase. The company's financial performance varied across different regions and segments in the recent period. Notably, China's domestic operations showed significant improvement, with a 45.6% increase in net cash flows from investing activities and a 24.5% rise in financing activities. The Americas also experienced growth, albeit unspecified, with a 64.6% surge in operating cash inflows. On the other hand, the wind power and solar energy segment struggled, reporting a substantial loss of $1,736,557.84. This underperformance highlights areas that require attention and improvement for the company's overall financial health. Management is optimistic about the company's outlook, citing opportunities for growth in clean energy and expansion into new markets. Despite market competition, they aim to maintain continuous growth through various measures. The company has also seen an increase in investment income from joint ventures and associates, while reducing external investments by decreasing additional investments in these entities. Overall, management is focused on promoting sustainable growth and increasing market share. The company has made strategic moves to expand its business through acquisitions and divestitures. Acquisitions include mergers and acquisitions aimed at expanding high-quality natural gas urban gas projects. This move is expected to enhance the company's capabilities and increase revenue. On the other hand, the company has also engaged in divestitures by derecognizing bankers' acceptances with a carrying amount of RMB 483,209,043.14. This decision allows for a reduction in liabilities and simplification of financial statements. The company has a history of paying dividends to its shareholders. This is evident from multiple references throughout the financial summary, including specific amounts and confirmations that dividends have been paid in various periods, including the half-year of 2025. The payment of dividends indicates a commitment to returning value to investors. Concerns over supply chain disruption, a growing issue. The recent financial summary highlights potential risks to supply chain operations. Specifically, page 38 notes a risk associated with continuation of power constraints, which could disrupt the smooth flow of goods and services. Furthermore, on page 223, it is mentioned that inventory value has increased significantly, but more notably, the inventory is under supervision due to executed contracts. This suggests that there may be issues related to supply chain management, including potential disruptions or delays in delivery. That concludes the financial summary for China Suntien. Feel free to comment below, and I will be happy to answer them when possible.